Good evening. Thanks very much for joining us on India Business Hour. I'm Shereen Bhan. Let's go straight to the top story this evening. Driving ahead with its plan to become a net zero debt company by March 2021, Reliance Industries will raise over 53,000 crore rupees through a rights issue of equity shares. This is the first time that the company is tapping the capital markets in nearly 30 years, and this is the largest equity offering in India's corporate history. The company has also said that despite the COVID crisis and the lockdowns, the due diligence by Saudi Aramco for the planned investment in the O2C business is currently on track, and that both parties are committed and actively engaged to the deal. Further, Reliance has said that 43,500 crore rupee Facebook Jio deal has sparked interest in Jio platforms from other international suitors. These announcements came even as the company announced its Q4 numbers as well as its full-year numbers. For the full year, earnings have crossed the 1 lakh crore rupee mark for the first time. For Q4, the company has reported a net profit before exceptional items at 10,800 crore rupees. This is slightly higher than what the street was estimating. Now, Nisha standing by with more details on the rights issue, the company's fundraising plans, and of course that deal with Aramco. Nisha, let's break it down. Let's start with the rights issue, the largest equity offering in corporate history in India, and of course Reliance also making it clear that due diligence with Aramco currently underway.
That's right, Shereen. In fact, what is very important to note here is that it's going to be a massive fundraising exercise by this large conglomerate. And I must add here over also that a conglomerate which has a diversified portfolio in different businesses also shows resilience, and that's coming out over here. While oil business may not be doing well at tough times like this, but the consumer-facing businesses are definitely, and therefore the fundraising ability even in times of COVID-19 situation. Let's break it down into the internals by way of which more than 1 lakh crore rupees will be raised by Reliance Industries. The first ever largest rights issue that has been really announced by Reliance Industries, 53,000 crore rupees, and 1:15 is the ratio for this rights issue. Now, very important to note here is that the promoters are going to support this rights issue fully, not just subscribe to the entitled shares, but also remember that they will be subscribing to the unsubscribed portion as well. So full 53,000 crore rupees is assured to Reliance Industries is very, very important. Also remember, a show of confidence and reinforcing the erstwhile announced Aramco deal, $15 billion announcement that was made by Mukesh Dhirubhai Ambani, that has also been reinforced in terms of due diligence. That process is going ahead, and the oil to chemical business that is being hived off, that process is also on, and they have reached out to NCLT for approvals as well. So that is on track and gives a show of confidence that that particular fund could also make it, and that deal is very much on track at the moment. Apart from that, the big mother of all deals that we have been talking about for the last 1 week now is the Facebook investing about 43,000 crore rupees in buying out Jio Platform's 10% stake. So that is going to come in. But besides that, the big announcement coming in is also that there are more global investors vying for more stake in Jio Platforms, and similar kind of stake sale cannot be ruled out. At least there is additional interest. So this is going to also heighten the expectations of further monetization and the kind of demand that is there for the consumer facing and the digital space of Reliance Industries' overall business portfolio. So these are going to be massive exercises and on way to become the zero debt company that Reliance Industries had earlier talked about. So all put together, let me sum it, that it's going to really raise over 1 lakh crore rupees with the kind of rights issue that has been announced, the Facebook investment, and also investments from BP. Over 1 lakh crore rupees already in the kitty, and Aramco hopes are still on. So all put together, on track to be a debt-free company, at least a massive fundraising exercise even in difficult times like this, Shereen.
Yes, thanks very much, Nisha, for breaking that down for us. But let's also focus on the numbers that came in today. Sonia is standing by with those details. Sonia, the Reliance numbers.
Well, thanks a lot for that. Reliance Industries reported their Q4 numbers, and the refining and the Rel Geo business was very strong this quarter around. So just to tell you, the net profits that Reliance Industries reported, the adjusted net profits before exceptional items came in at 10,813 crores. This was slightly above the street estimates of 10,700 crores. Now, there was a big exceptional loss of 4,267 crores due to a non-cash inventory loss that the company posted due to a drop in oil prices and demand destruction because of COVID. Now, the refining sector EBIT was much better than expected. The EBIT was down about 3.8% quarter on quarter, but the gross refining margins at $8.9 a barrel were better than the street estimates of $7.8 a barrel. Apart from that, the big positive really was Reliance Jio. The operational performance was very strong. The EBITDA was up 15% quarter on quarter, and the profits were up over 70% for Reliance Jio.
Saudi Aramco due diligence seem to be on track. Secondly, company will be moving before NCLT for hiving of the O2C business, oil to chemical business. And third flash is that company is committed to raise 1 lakh crore by Q1 of FY21, that is by March 21. That means the certainty of the Aramco deal going through is likely to happen, maybe at a lower valuation, may not be at a $75 billion, which was earlier envisaged to be, and their 20% was to be hived or to be monetized. So may not happen at 75 billion, but that is seen to be very much happening. And when the company is saying that 1 lakh crore will get raised, and if you add the cash flow of about maybe 40-50,000 crore for FY21, the company will be able to achieve the target of making the company net debt-free on a net of cash basis, because the net debt as of 31st March 2020 is 1,51,000 crore.
You still have the Saudi Aramco dialogue on. I mean, most people on the street had probably thought that has been put on the back burner, given the fact that Facebook came in. There was another fundraise that the company carried out recently. But if the Saudi Aramco deal is still on the table, it is a very different premium that you would attach to a optionality on the stock, right? So if you were to add all these factors in, and then of course the disappointment of 1257 at that 7% dilution on rights could probably take away a little bit of that thing of additional buying by retail investors. But my sense is the stock will probably only get some strength. There could be some aversion on Monday. It typically happens. It goes into earnings with a very, very strong headwind and then loses a bit of ground for a week or so. But I think the stock will make a comeback as the new businesses start getting penciled in.
If you look at what's happening today with the COVID and the lockdown across the country, I think the data consumption is definitely going to go up. So as far as Reliance Jio part is concerned, they will definitely show even better results in the current quarter where we are. Going forward, Reliance Jio and Reliance Retail will be the two main wheels on which Reliance will start delivering. They are already Saudi Aramco deal will give some amount of taking out money out of the refining business, and these two wheels will generate significant revenue on a quarter-on-quarter basis to take it forward. We have a target of about 1,800 on Reliance for 1 year, and we continue to maintain that.
That's the standard disclaimer, and that's a comprehensive wrap of the results as well as the commentary that's coming from Reliance. But staying with earnings, FMCG major Hindustan Unilever has reported a disappointing set of numbers for Q4 of the last fiscal year. At 9,000 crore rupees, revenues were a big miss because the street was expecting that number to come at about 10,000 crores. At 1,500 crore rupees, net profit is also well below estimates. The big shocker, however, is the domestic volume number. Volumes have contracted 7% over the quarter. Priya Sheth joins us now with the fine print of HUL's numbers. Priya, tell us about the company's performance across product categories and what kind of commentary is it now leaving us with for the coming quarters?
Well, the big number that the street has been watching out for FMCG major Hindustan Unilever has been volume growth, and volumes have declined by about 7% in the January to March quarter. This is perhaps the biggest decline in volume growth that the company has seen since demonetization. Now, the management has been very categorical in saying that owing to the coronavirus outbreak and the lockdown, stocks at the retail or the trade channel levels have come down significantly growth in both rural as well as in urban areas has decelerated. Now, they've also said that the FMCG market had started slowing down even in the pre-COVID era, and therefore this lockdown further accelerated the kind of slowdown that the market has been seeing. Now, they've also said that they've seen volatility as far as crude and currency is concerned, which is challenging for companies to handle in such stressful times. Now, the HUL management has also said that factories have been operating at about 70 to 75% capacity, and they have been ramping up production of products that have a good demand. For instance, hand sanitizers production has been ramped up by the company over the last few months. There are several new products that the company is also launching in the hygiene space going forward in the months of May as well as in June. Now, HUL also said that food as well as health and hygiene are the three categories that will be driving growth going forward. These are the categories of the future. But as far as overall growth is concerned, they haven't been able to predict how the markets will perform going forward. And even on the demand situation, we'll have to really wait and watch how this shapes up. And the extent of the monsoon and the impact it has on the rural population is also something that we will have to track very closely.
Well, it is going to be trying times. Priya, many thanks for joining us. Now, the COVID outbreak and the pan-India lockdown has taken a toll on India's core sector. The nation's core sector output is contracted by 6.5% in March. For the full financial year, the growth is at a mere 0.6%. Lata joins us now with more. Lata.
Yes, minus 6.5 is a number I have not seen in my 25 years of reporting on core sector. I don't have the record to tell you whether it is an all-time low or it is some multi-decade low, but it's a terrible number. And it is only the last week that was COVID impacted. But even if you looked at the numbers, I mean, it is minus 25% for cement, minus 7.2 for electricity. I can understand electricity because people will not have been consuming. But cement, people would have stopped buying perhaps only by the last week of March. It's a terrible number, so looks like some kind of slowdown had crept even earlier. This is quite clearly a COVID victim. Only coal has done 4%, so mining perhaps was full on up until the third week of March. This is one set of numbers, COVID casualties. But if you looked at, April to March, when you get the March numbers, you also get the full FY20 numbers. That's a pathetic 0.6%. I have not seen a number as low as this, not even in FY09, which was a layman impacted year. This is, a victim of multiple problems. There was a slowdown in the earlier part of the year as well, unseasonal rains in October. And just as we were coming on stream with Jan and Feb being very good months, we got hit by COVID in March, and March normally accounts for almost 15-20% of the full year output, and therefore losing March is terrible. So we have multiple problems. We have gone into COVID, a weak and feebly recovering economy, and then comes this big blow. So FY20 has been a washout year as far as the core sector is concerned.
It clearly has been a washout year. Lata, many thanks for joining us with that. Coming up next, states begin working on sending migrant workers to their home states and receiving workers back. How are the preparations panning out? More details when we return. Here with India Business Hour, with over 1,100 active cases being added in 24 hours, India's COVID tally has jumped above 33,600. Also, over 570 people have been cured since Wednesday, taking the number of total recoveries to 8,400. With this, the recovery rate has risen to over 25%. Meanwhile, as India gears up to restart the economy after the 40-day nationwide lockdown ends on the 3rd of May, Prime Minister Modi has nudged various ministries to accelerate reforms to attract foreign investment and promote industrial growth. In a meeting attended by Home Minister Amit Shah, Finance Minister Nirmala Sitharaman, the Prime Minister discussed strategies to bring investments into India in a fast-track mode. Now, many state governments are gearing up for a graded relaxation of restrictions come Monday, but containment zones will remain on lockdown. Punjab, which has become the first state to extend the lockdown by 2 more weeks, has also announced relaxations. The state government has said that industries can reopen if they can provide transportation to their workers. Most shops have been allowed to open, but with certain riders. Karnataka has also decided to allow industries to function in all areas except containment zones from the 4th of May. I caught up with Manpreet Badal, the Finance Minister of Punjab, and Karnataka's Industries Minister Jagdish Shettar. Here's what they had to say.
The supply chain for the entire economic activity or industry or whatever you may call, that stands ruptured. Even if we were to lift the lockdown completely and entirely, how do you restore the entire, the chain which has been disrupted? Even if you were to, Shereen, restore the entire chain, I'm actually concerned about the demand. Where is the demand going to come from? I mean, you're sitting in the studio. Would you like to buy a new pair of shoes today? Would you like to buy a new pair of shirt or a new car? People have lost their livelihood. People have lost their jobs. They have suffered losses in their businesses. I don't think so. There's money floating around to be able to create that kind of a demand.
We have divided entire state 3 zones: red zone and orange zone and green zone. In the green zone, 14 districts will come, and orange zone 8 districts will come, and another 8 districts, they are red zones. And here in green zones, almost all state government has given clearance to start all type of industry. If in all 14 districts there is no containment area, there is no report of the positive cases, in that 14 districts we allowed to start the industry, all types of start industry.
So states looking at restarting, but of course awaiting clarity from the central government, and that is expected perhaps over the weekend or on Monday. Now, ensuring the return of stranded migrant workers, students and others to their home states is also on the agenda for states. UP has begun preparations to receive 6 lakh migrant workers over the next few weeks. Maharashtra has laid down guidelines to send stranded workers home, but their journey will begin only after getting approvals from the receiving state. Also, Kerala, Telangana, Bihar and Rajasthan have asked the centre to run special trains, saying transportation of lakhs of workers by bus is not a feasible proposition. Well, here's a quick wrap of the global headlines tonight. Facebook reports promising revenues for first quarter, says it has seen signs of stabilization in April after a steep fall in ad revenues in March. But Twitter fails to assure analysts of signs of a recovery despite showing strong Q1 numbers. Oil giant Royal Dutch Shell slashes dividend by 66% following a dramatic slide in oil prices in the wake of the global COVID crisis. This is the first such reduction since World War II. The company's net profit dropped 46% to $2.9 billion in the first quarter of 2020. President Trump steps up his criticism of China as the pandemic rages on, says China will do anything in its power to ensure he's not re-elected. Adds that he's looking at different options in terms of consequences for Beijing over the virus. Fresh filings for jobless claims in the U.S. come in at over 3.8 million. That's the lowest level since March 21st, but still higher than economist expectations. It also brings the rolling 6-week total to over 30 million, making it the worst employment crisis in U.S. history. The Eurozone's GDP contracts by a record 3.8% in the first quarter of 2020 as industrial output across member countries is hit by prolonged lockdowns. Italy and France enter a recession as both their GDPs contract sharply in Q2 for a second quarter in a row. Spain's economy contracts 5.2%. Electric car maker Tesla reports a 30% jump in revenue and a $1.6 million profit for the first quarter despite a lockdown in the US, but says the outlook is hazy. Top boss Elon Musk pushes for an end to the lockdown, says the shelter-in-place orders are fascist actions that are stripping people of their freedom. And veteran actor Rishi Kapoor, whose film career spanned over 4 decades, died today after a prolonged battle with leukemia. He was admitted to a Mumbai hospital last evening. A statement released by the 67-year-old actor's family said that he remained jovial and determined to live to the fullest through 2 years of the treatment across 2 continents. Here's a look at the life and times of Rishi Kapoor.
Rishi Kapoor was born into one of the first families of Indian cinema, the illustrious Kapoor family. He was the son of auteur Raj Kapoor, grandson of the pioneer of Indian theatre Prithvi Raj Kapoor, and father of this generation's star Ranbir Kapoor. Rishi Kapoor's first foray on screen was when he was just 3 years old. Rishi Kapoor received the National Award for his performance in the 1970 classic Mera Naam Joker. He made a crackling debut as a romantic hero with Bobby in 1973 opposite Dimple Kapadia. He was the chocolate hero of his times and made a mark in romantic films like Karz, Prem Rog, Chandni and Bol Radha Bol. Rishi Kapoor was also a part of many multi-starrers and two hero films that went on to become super hits like Amar Akbar Antony, Sagar and Damani, to name a few. He was the original romantic heroes of the 70s, 80s and in the 90s we saw him as a middle-aged hero romancing much younger heroines such as Divya Bharti, Raveena Tandon and Tabu. When his leading man role stopped working at the box office, he transitioned into supporting roles, starting with Raju Chacha in 2000. The new millennium ushered a new Rishi Kapoor as an actor of repute. He did memorable turns in the 2004 hit Hum Tum and 2009's Love Aajkal, and an endearing middle-class school teacher trying to keep up with his family's aspirations in Do Duni Char One Hearts. Rishi Kapoor relished his second innings at the box office.
We were straight-jacketed in our images. Now it's the time to really explore and get into, different kind of roles and different skins of characters and, work that out. And then I myself work on those characters.
Rishi Kapoor was diagnosed with cancer in March 2018, preceding which he went to New York for treatment. He returned to India upon his recovery in September 2019 and signed a much-anticipated remake of The Intern alongside Deepika Padukone. He also enjoyed a third innings of sorts via his hot takes on social media, which often made headlines. This candid star will be missed by millions of his fans and remembered fondly for his rich and unique legacy.